Want to see what the pros are quietly eyeing right now? At Insightful Value, we dig deep into overlooked companies with real income potential, like this one. Today, we're breaking down Oesterreichische Post AG, Austria's leading postal and logistics operator, whose stock price is currently trading near its 52-week lows. So the big question, is this a hidden dividend gem or a value trap? This review is for informational and educational purposes only. It's not financial advice. If you enjoy this kind of no-nonsense breakdown, like the video and subscribe to the channel. Let's go. Oesterreichische Post, also known as Austrian Post, is more than just a mail delivery company. It handles letter mail, parcel logistics, retail services, and even banking products through its stake in Bank 99. The company dominates the postal market in Austria and has a growing presence in Southeast and Eastern Europe. Despite a stable business model, the stock has dipped significantly in the past year, making it interesting from a value investing standpoint. Revenue in 2023 came in at $255 billion, with a slight uptick versus 2022, mostly driven by strong parcel growth. Letter volumes continue to decline, a long-term trend, but parcel logistics are gaining ground thanks to the boom in e-commerce. Operating profit, EBIT, stood at $185 million, with an EBIT margin of 7.2%. Not flashy, but fairly consistent for a logistics-heavy operation. One of the standout features? The dividend. Austrian Post paid 2.15 per share in 2024, translating into a dividend yield of roughly 7% at today's prices. The company has been very consistent with its dividend policy, increasing or maintaining the payout for over a decade. That makes it attractive for income-focused investors. On the flip side, there are risks. Labor costs in Austria are rising, and the company has flagged wage inflation as a pressure point. Also, capital expenditure is increasing as the firm continues to automate logistics centers and upgrade infrastructure. Profit margins are under stress, especially in international parcel segments. Another point to consider, the company is state-influenced. The Austrian government holds a significant stake, which can sometimes slow down decision-making or introduce political considerations into operational choices. Why might you consider investing now? The stock looks undervalued by several metrics, including price-to-earnings and price-to-book ratios. It trades at under 12x earnings and below 1.5x book value. The yield is strong, and cash flow covers the dividend comfortably. Plus, the balance sheet is in decent shape with net debt EBITDA around 1.0x. Not excessive. Why not invest? Growth prospects are modest, and structural decline in traditional mail means the company will always be fighting an uphill battle to stay relevant. If e-commerce parcel volume flattens or declines, that could hit revenues hard. And as with many legacy infrastructure firms, agility is not its strong suit. At Insightful Value, we specialize in breaking down businesses like this. We strip out the noise and focus on what really matters: cash flow, margin health, sustainability of dividends, and real-world risk. Whether you're building income or looking for overlooked equity value, we're here to help. You can find more on Austrian Post and dozens of other undervalued companies at insightfulvalue.com. Don't forget to like this video, hit subscribe, and visit us online. Insightful Value. No fluff, just facts.